Hey everyone, if you want to grow your company, if you want more profit, if you have a current or you want a future sales team to be producing at a higher level, stay tuned because this is what we're going to talk about on the CEO Sales Strategies podcast. I'm Doug C. Brown. Let's go there now.
All expressions of opinion provided in this podcast are subject to change without notice and are not intended to be a forecast of future events or results. There is no assurance that the trends highlighted in this podcast will occur in the future or that the projections, if any, will be met.
Hey everyone, welcome to the CEO Sales Strategies podcast. Once again, I got a great guest for you, Mr. Eric Wiklendt, and the company's called Speyside Equity. You can find them at speyside That is SPEYSID equity.com. And Eric, welcome to the call, sir.
Thanks so much for having me today, Doug. Really appreciate being on.
Why don't you kind of set the frame, tell everybody what you guys do, and then we're going to walk in on how to create more EBITDA margins, sales revenue, and valuations in companies.
Yeah, no problem. Speyside Equity is a private equity firm. We really like to buy $50 to $500 million revenue manufacturing and value-added distribution businesses. Usually they're in misaligned ownership structures. That usually means that they're a little underloved and maybe a little undermanaged, so a little bit underperforming. And we like to buy those things and execute a value creation strategy using our Portco value creation system, which is described as fix and build. Although we don't always do the fix part, sometimes we just do the build part. But the point is to improve the EBITDA of the business and the EBITDA margins such that in our 3 to 7 year hold period, the equity value of the company is worth more when we sell it versus when we bought it.
Thank you. And so all of you out there who want to grow your company, pay attention to this conversation because that's exactly what we're going to talk about. Look, 3 to 7 years, not a long period of time in the lifespan of a business in most instances. Now, here's the fun part, folks. You're going to hear stuff today that you may have heard in the past or you may never have heard in the past. Sometimes your brain will go, well, wait a minute, he works with manufacturers. That can't apply to me. Oh, yeah, it does. So hang on, let's go. So Eric, let's drop right in. I love one of the things that you guys do right out front. You guys have like a improve operations first mentality when it comes to actually growing and fixing and building a company. Why operations first? Because so many people think, well, I just have to raise the revenue.
Yeah, no, it's a great question. And I would say it's kind of akin to like a house built on a foundation of sand, or a building built on a foundation of sand is not going to hold up, right? And for us, that bedrock foundation is a well-run operation. And there's no point of growing a business that has negative or bad EBITDA margins or any sort of margins. So for us, we want to make sure that foundation of operations is set up well so that we have a scalable platform, making sure that we have scalable, repeatable processes that deliver results. And once that's set up really nicely, then it makes sense to grow the top line and focus there because it's a bit of a double whammy, in terms of if you're growing a business top line that has good bottom line margins, it's just more EBITDA and free cash flow in the end. And frankly, more valuation. People pay more for better run businesses.
Yeah. And folks, those of you who want your business to be less heavy, fix your operational side of the business in most cases. In other words, if you're selling in operations, there's a gap between your sales process, your operations process, or operations is dropping the ball. If you've got to go do second do-overs, third do-overs, due to the operations side, even if it's not that bad, there are always these tiny spots that you can optimize within that handoff between sales through operations, and it will improve your EBITDA. For those of you who are wondering, EBITDA, call it operational profit, if you will. Is that fair, Eric? Can we use that word for those?
Yeah. So yeah, operating profit is, so EBIT is very similar to operating profit. EBIT includes income not from operations, whereas operating profit is purely, profit from operations. And then EBITDA is earnings before interest, taxes, depreciation, and amortization. So the reality of the matter is if you don't have a lot of other income in your income statement, EBIT and operating profit are basically the same number, and then you add back depreciation and amortization and you get EBITDA. The reason why that number is important is it's kind of a good it's a good bellwether for operating cash flow, and it's also like how is the business generating cash flow and profit regardless of tax structure and capitalization structure. That's why the interest and the taxes are excluded.
Yeah, the first time I heard the EBIT, long time ago, I was like, "Is that a bird?" Like it was like I really wasn't sure. I was like, when I was learning this so many years ago. So, all right, so we fix the operations first. We start really improving that process. By the way, all of you who are sales centric on this call, listening to this, when you fix your operations, you're going to love it because the sales process actually goes a heck of a lot smoother. And remember, when you're fixing your whole customer journey here, right? So you sell the customer, you're moving it through operations. They have an amazing outcome through that whole process. It goes through, the install goes perfect, everything's great, and it keeps moving along the customer service journey. All along that process, folks, you are building either one or two things. The client's moving a little away from you and not as, happy or not as confident, or they're building confidence in the relationship that you have. So you want to keep elevating that process. And so many companies, after they sell, Eric, they just like, oh, well, sales is done with this. The rest of the company will take care of this. And sales sort of disengages from it, which is a huge mistake from my perspective. So let's talk about sales force effectiveness. Like you folks specialize in manufacturing, but a lot of companies, not just manufacturing companies, folks, you have holes in your sales process, right? So how are we improving upon, and what are some of the major things that you see that sales teams or organizations aren't really doing that they should be doing today?
Yeah, good question. I mean, we have a whole Salesforce effectiveness process and model that we use. There's a bunch of things though to answer that question, but I'll give you kind of like top three. The first thing is what we call fact base. And what it is information on the customers and who they are, the segments, and analysis around that. Number two is around pricing. I would say getting pricing right, who has pricing and margins right. And then number three is compensation on Salesforce. So, if you tell me in 30 seconds, you tell me about the pricing process of a company and then also the Salesforce compensation of a company, I can tell you without ever talking to anybody pretty much what you're going to get, from the company and from that Salesforce, because those are the big things that really matter. But those three things, fact-based pricing and then Salesforce comp, they determine a lot. There's plenty of other things to get right. Don't get me wrong. Like literally, sales and sales management's a whole degree in certain universities nowadays. So, you could spend like 2, 3, 4 years studying it, but to boil it down to the Pareto analysis of things that I have seen over the years where things are bedrock of getting it right. It's fact-based pricing and Salesforce comp.
Let's dig into these a little bit. I want to step back for a second because customer segmentation, or identifying the ideal right fit economic buyer, if you will, is that one and the same when you're talking about segmenting the customers? What do you go after that gives us the highest return, the quickest purchase, the best customer to work with? They love you, they refer many other people, that type of thing.
Yeah, so every customer, you can calculate a lifetime value of the customer.
Yep.
And really what that is the net present value of the future cash flows associated with customer buying from you. And there's a couple ways to do segmentation. Well, there's a bunch of different ways, but one of the big ways is what's the end market use? How is the customer going to use the product? You could do it geographically. You could do it based on size. You could do it a whole number of things. But to me, like the two that probably really matter the most are potential, right? So size, and we do a lot of A, B, C, D, E analysis applied to the segment that they're in relative to the end market use. The reason why this is so important is ABCDE determines kind of how you should be thinking about approaching that customer. And then the end market use allows you to think about as a salesperson or sales manager, how do you do value-based selling? And there are way too many sales forces out there, frankly, that they're not sales forces, they're order forces. And what I mean by that is they don't know how to do value-based proactive selling based on the customer needs. They're not out there asking the customer the questions about what problem, trying to get to the, root cause of what problem is the customer trying to solve and what solution does their company bring for that customer to help solve the problem. The problem with that is when you do that and you just become a reactive order force, all you're doing is sitting by the phone taking orders and you're playing the price game, which is bad for everybody, by the way, not just the company that the sales guy's at, but also the customer, because you're providing no value to that customer. You're not solving a problem in any sort of meaningful or useful way. And salespeople should always be thinking about, hey, how do I provide a solution that helps my customer be better, be more profitable, higher quality, better on-time delivery, more safe, whatever, better, faster, safer, cheaper, sort of a thing. And if you don't segment properly, you'll never get to the inside of those answers. And by the way, if you're not doing value-based selling, you're certainly not doing value-based pricing.
Ah, nail on the head. I'm glad you said that. We're going to come to value-based pricing in a second here. I want to throw something in that's super, I think, important of what you just said. Folks, if you're not selling on value, and the value is not what you deem as value, it's what the buyer actually deems as value. The perception of that value, that's what Eric is speaking about right now. And if you're not doing that, you're missing a huge percentage of your sales, or certainly a percentage of the sales. You're also not developing a relationship that's value-based. You're developing one that's transactional based. So when you go to expand sale, when you go to ask for referrals, when you go to all these things that we talk about, you're going to get far less of them because there's no valuable relationship there that they have that faith and trust in. So everything that Eric is saying is spot on. And what he was saying, and managers, listen up, okay? If your people don't know how to segment and they don't know how to do value-based selling and they don't know what targets they're supposed to be calling on, and you're not actually teaching them what to do, you're dropping the ball on your manager side. Your job on the manager side, and Eric, correct me if you think I'm incorrect, two things: grow the revenue of your department or your division, and two, train your people up so that they can be better doing what you need them to do. Anything else you want to add to that,
Yeah,
Eric?
no, I would just add that training really, really matters in sales. I think of sales almost like an athletic competition.
Yes.
So it's one of those things where if you're not getting better, you're getting worse, frankly. So I don't think there's enough sales training done with sales forces, and there's a bunch of different sales training that can be done. I mean, the most basic is just basic sales training. I used to train this at Hilti. We called it triple S, strategic selling skills, and it's kind of just like real basic stuff, like strong opening, introduce yourself, look the person in the eye, shake their hand, ask questions to understand their needs, fit your solutions and products and services to their needs, and then close, ask for the sale, that basic stuff. But there's way more than that. Like there's product training, and there's psychology training on how to like build rapport and connect with people. There's high, deep, and wide training about like how to think about like a organizational sale, where it's like you need to go to different layers of the organization to sell to different people that have that are different stakeholders that have different needs. But that training really, really, really matters because in sales, like you can always, be getting better. I don't care if you've been doing it for 20 years, there's always some opportunity to get better because new products and services and therefore solutions are, if you're at any sort of decent company, are always coming out and you should be learning those at a minimum.
Yeah, I firmly agree with this conversation that we're having and your points of it, because here's the things, folks. If you're not, think about it as any professional athlete who gets older, right? They still train every day, every week. You're not going to stay, let's take hockey, for example. You're not going to stay in the National Hockey League if you have the same skill sets you had 15 years ago, trying to deploy them as you get older. Now you're, let's say, 37 and you're playing against 21 or 19, 20, 22-year-old kids. You might have a little bit more skill, but they're going to be quicker than you are. The game has changed. It used to be a big thumping game. Now it's changed to speed and all these things. So doesn't sales. AI, pandemic, shifted from in-person sales to virtual sales. All of these are opportunities to learn and grow above and beyond where you are today. And just as Eric said, if your company is changing products, services, and they should be upgrading and doing that type of thing, there's always something new to learn. Again, managers, are you doing this on a weekly, daily basis with your people, keeping them sharp, way sharper than your competitors? If you're not going to be able to sell on value-based pricing. So, Eric, I love that topic of value-based pricing because this is where we can really widen out the margins as well in the process. You want to kind of delve into that and explain what is value-based pricing?
Yeah, so value-based pricing is a function of understanding what makes your customer profitable and pricing accordingly. And again, that's very important to do segmentation because the more you do segmentation, the more you understand about the customer and how their business runs. And that's also why like high, deep, and wide matters. And also, another really good book is Selling DeVito, very important
Yeah.
top officer. What matters at one level of the organization is different from the middle versus, maybe people just starting their careers, right? Everybody has different goals and metrics. So understanding how the company makes a profit, your customer makes a profit, and therefore creates value, right? Because they're trying to create value in their business by improving their EBITDA and EBITDA margins and free cash flow. So if you understand how your products and services become solutions that help make them more profitable, then you understand the value of your product, and then you can price it accordingly. If you have a product or solution that creates a lot more value for a company, they're going to tend to want to use that product because it creates value in their company, and therefore you can price that for the value that it creates for your customer. That's the idea. And it's like, I'm not telling people don't be a pig. That's not the idea here. But the idea is, you should be selling on value, you should be pricing on value. And then as a sales force, if you're giving input into the new product development and thinking about new products and services that should come to market, those should be creating more value for the customers that you're servicing. And if you continue to do that, and it's a good partnership between your company or firm and the customer, you're going to be their number one supplier because you're always helping them create more profit and therefore value in their company. And they're not going to push so hard on you on price. They're going to be pushing on you more of, hey, when's your next product or service coming out? Because you guys help us so much create so much value. What are you guys thinking or seeing that helps me be profitable? And I want to partner with you to do that. That's the way to think about it. And it's also the way to like really think about doing time and territory management. Go to the companies or the prospects where you can help them create the most value, not the ones where it's most fun to just hang out with Guy and give them some donuts.
As you get older, you can't eat the donuts anyways. That's what I find. Well, you can eat them, but you're going to pay for it later on. So, folks, that's from an
That's
old
what
guy.
treadmills and Ozempic are for, I guess.
Exactly. Folks, I want you to write down become a value creation partner. That is a very, very good place to be. That's where you now call upon the CEO of the company if you're dealing with the CEO, and in many cases you will be, and they pick up your phone because you're on first name and they look forward to your call. When you can get to that level where they're elevating you as an equal peer and now they're passing you along to the equal peers, you're going to now expand your network very quickly. Eric, if you disagree with anything I say, please let me know. And
No, that's correct.
Okay. And also, folks, when you're creating value, remember there's a business return on an investment from the buyer's thought. There's also a personal return on an investment from the buyer's thought, too. You've got to hit both of those in your conversation, because if you just stick with the business and you forget about the personal side, we all buy for a reason personally as well. And you want to make sure you uncover that while you're going through that process. And it's interesting because this is going to sound maybe a little silly to some people, but my brother used to drive a Lexus and I used to drive at the time a Toyota Camry. My brother's 9 years older than I am. And he drives his Lexus in the yard one day and sitting next to my Toyota Camry, and he's looking at the Camry, Eric, and he's like looking at the Lexus, and I'm like, what are you doing? He goes, do you know that the chassis on my Lexus and the chassis on your Toyota Camry are the same? I said, what? He goes, yeah. He said, do you know the motor is actually the same motor in your Camry as your Lexus? And he goes, yeah. I go, yeah. And he goes, I didn't know that. He goes, yeah, that's what it is. And I said, well, geez, Dave. I said, why are you asking that? He goes, because I bought the same car. I got exactly the same thing. I said, no, you didn't. He said, well, what do you mean? I said, you paid $30,000 more than I paid. But you also have the status of Lexus.
Right.
So that is the personal ROI, guys. Driving around in something like a Lexus, flying first class on an hour and a half flight. Why? Because you can. Or you can get some work done or whatever you value, right? Folks, I want you to understand it's not just straight on, but when you use, it is straight on from the business return on investment, personal return on investment. But when you know those two things and you can price accordingly, like what Eric's saying, you get $30,000 more for the same car, if you will. And that's a huge margin increase in your business. By the way, those of you selling, that's a huge commission difference too. And a huge difference in the end of, your paycheck at the end of the year. So take heed, please, and pay attention to this value creation, because it is the key to building huge relationships that are never ending. And someone knows someone who knows someone. And that's how you get from point A to point B to point C very quickly. And far less costly to do that in most cases. Eric, I want to dive in, if you would. Compensation, near and dear to my heart. I'd love to get your feedback on how to compensate a sales team, or in general, and what we should be looking at from the perspective through your lens of doing to keep a sales team growing, motivated, and producing. And I know that's a lot to ask in one question.
Yeah, sure. Couple points there. So relative to compensation, it depends. So a little bit. My view of the world is as much as possible. I shouldn't say possible. As much as reasonable, sales forces should be compensated with variable compensation, i.e., paid to create profit. And there's a couple factors that go in there, though, that are worth noting. So if the sales cycle is longer, then that variable comp probably needs to be considered on that length of basis, right? Because if you're selling, if the sales cycle is like 12 to 24 months, right? It's a real complex sale. It's really hard to, make a lot of the variable comp, short. You can't do it quarterly if the sales cycle is like, 4 quarters long. That's just not fair. That's important. It also depends, kind of how detailed and technical the sale is, right? Those tend to be longer sales cycles. So that's another thing to consider, and you may not want as much variable comp in there, or you may want it to be a longer basis. And again, also like how important it is to develop relationships across the whole organization that make the sale complicating. That should be considered as well. Now, when you're considering variable comp, my view is to the furthest you can go down in the P&L statement is where you should set the targets at. Now, pretty much everybody can get to a gross profit dollar calculation. That's not too hard. That's usually, revenue minus mostly variable cost in terms of labor, material, some amount for economic depletion, usually depreciation and amortization kind of go in there. That gets you your COGS and gets you your gross profit. But if you can push it down to operating profit, that's great. If possible, you can make it like an operating cash flow or a free cash flow calculation. That's good too, because there are certain things that show up relative to the go-to-market or commercial relationship that really impact cash flow, that really matter. So if you can get that into the Salesforce comp, that's great. You may not always be able to do it because it's hard to allocate some of those SG&A costs and or understand working capital or CapEx that flow down into free cash flow. But my view is that commissions paid based on gross profit or operating profit dollars matched to the selling cycle are the best way to go, because then everybody's creating value, and it pushes things for the sales force to want to go out there and sell. One other thing I would just like to say on this that kind of drives me a little bit nuts with organizations, and I guess I'm going to say this to the executive management of companies, which is, it's okay if in a given year a sales guy makes more money than you, if you're the CEO or the CFO or the COO,
Yeah.
right? Because and if you have a problem with that as the CEO, CFO, COO, CRO, whatever your C-level title is, that's fine. Get out there and sell yourself if you think that's an issue. You should be making more money based on equity LTIPs that are long-term in nature, and such that over 3 to 5 years your equity LTIP should pay well, and you should want that sales guy to make more than you in a given year because they have a really good year, because they've sold really well and they've gotten really good commission. So stop thinking that your ego is more important than how much the sales guy makes, because there probably are going to be given years where great salespeople make more than you in a given year. But over the long term, if you're doing your job right as an executive and you're removing the impediments to selling, you should be making, probably more money off of equity long-term incentive plans than that sales guy. So it's a partnership. Get your ego out of the way and let those guys make money.
I think every top salesperson that in the world who listens to this is going to want to send you a gift. Buy you That's
Doug, you know what's wrong with that though? You know who should send me a gift is the CEO.
That's true.
Because they're going to actually make more money from what I just said versus the sales guy. It's like, but it drives me nuts. These guys, like, they don't. Sometimes, and gals, sometimes their ego's so big and they're like so upset that the sales guy, oh, you made more money than me this year, or she made more money than me. It's like, who cares? You're gonna get it in the end, dude. Like, but yeah, no, I don't know. It's a thing.
No, it is definitely a thing, and I had that happen twice in my career. Like, I was the top number one person, making more than the CEO was, and in one case, they actually took me out of the company. The CEO took me out of the company, and before he did it, I said to him, I said, "You do realize that when I'm out of here, the relationships I have are going to move with me to my next place. So you're going to see a drop in your sales because it's
Right.
not, they're bonded with the company, because any top producer who's intelligent will make sure the relationships capital always stays with them as well. I mean, it's just how it works. And and so they released me, and it literally almost every relationship I had moved with me to the next level, right? Over time. So it's like I'm a big champion of what you're saying, not only because it's personally happened to me, I've just seen it in organization after organization. And when you said it, I started laughing because I was like, oh my gosh, thank goodness somebody's saying this on this podcast, because it is a huge mistake, CEOs, when you're doing this. And Eric is absolutely right. Are you in it for the short run or the back end? And you should be making more and more and more off that back end, as time goes on. So take care of your salespeople, because those type of people, they're not as abundant as the other type of people in selling. Would you agree with that or disagree with that, Eric?
Yeah, generally agree. I mean, now I will say you get some salespeople with some pretty big egos,
Oh
and
yeah.
the other side of the coin, I would, tell the salespeople like is don't throw it in people's faces. Like, celebrate those wins, a little bit more privately, and or don't use it as a don't tell the CEO or the COO or CFO like, you need me and you can't live without me, because they will find a way. If you're that arrogant and that
Yeah.
obnoxious about it, they will find a way to not need you.
So Eric, thank you. Because here's the thing, those of you who are top performers listening, just because you're a top performer, it doesn't make you better than anyone else. It just makes you're doing the job more effectively than other people. So start spreading the love, right? You can actually share with people what you're doing. So what? They compete with you a little bit. If you're that truly that top performer, you're going to outcompete them anyways. So if you're arrogant and you're disruptive and you need to be placed, in a different feeding trough down the line, and it's your own fault, then it's time to start looking at our own self checks on our egos. And what I'm speaking about with the CEO is not that personality. I'm talking about myself in that particular aspect. I'm not the guy who walks around and is boisterous and go, "Look what I did! Look what I did!" I'm the guy who will go, "Hey,
Right.
listen, you're a little bit light on your sales goal here. I have some understanding that I can impart upon you and help train those people, help your management. They'll appreciate that as long as you're not taking over." I've experienced that where they do appreciate it. And again, CEOs, it's always a balance. And on the comp, what I heard you say, Eric, if I understood correctly, is we want to push the comp as far down the P&L as we can push, but we got to be fair to both the salesperson and the company at the same time. And when we're doing variable compensation, for example, we don't want to say, hey, if the sales cycle is 2 years, we don't want to force the variable compensation into the first quarter every single time because it's unachievable to hit. And therefore, the salesperson is not going to make what they want to make. But at the same time, we can't allow the salesperson to be pulling more money than they should without producing. Is that a fair statement?
Yeah, it's match again. I go back to alignment of incentives relative to value creation. So and you got to be a little, you got to be reasonable about that. And I think sometimes a lot of those plans are very formulaic, and there needs to be a little bit of give there. 5 to 15% one way or another, right? Where it's like, okay, there you're not going to get it right 100%. What I always say about Salesforce comp is like when you pick a Salesforce or design a Salesforce comp plan, you should pick based on the negatives and minimizing those. And what I mean by that is no Salesforce comp plan is ever going to be perfect. It just won't be. It just can't be, right? And that's okay. But what needs to happen is you need to stress test it, and really both sides. You need to stress test it to think about, okay, what is this naturally going to incent? And it's going to incent some positive things. Hopefully, you get more of those, but it's also probably going to incent some negative things, or there are going to be some negative externalities as a result of that comp plan. just make sure you understand what those are and make sure you can live with them, because you're going to get some. You can't get zero. I'm telling you that. So make sure you understand what those are, and then design it to minimize the negatives that don't affect your company as much as the positives affect you well, if that makes sense.
That, folks, that's wisdom speaking right there. That's total wisdom. So thank you. Hey, what was that old Rolling Stones song? You can't always get what you want, but you can get what you need, so to speak, right? Out of the comp plan.
Yep.
And yeah,
Yep.
and I see that many times where people are trying to design this perfect thing that doesn't ever, it's always going to move and breathe. And so I like the idea of maximizing, the negatives, getting those out of there, and the stress on both sides of the fence. It's the fairest way. I have heard somebody actually say that. So thank you for bringing that forth. Well, cool. Eric, how do people get a hold of you, learn more about you, or learn more about Speyside Equity?
Yeah, if you go to our website, spaceidequity.com, my contact information is there, or LinkedIn is always good if you want to link up there. My email and cell phone are listed on my LinkedIn profile, so feel free to give me a call or shoot me an email. We're always looking for good businesses to buy in manufacturing, $50 to $500 million revenue manufacturing and value-added distribution businesses, and or we're also always looking for good executive talent at our portfolio companies. So if you're in sales and marketing and would be excited at working at a private equity owned $50 to $500 million revenue manufacturing business, hit me up and let me know what you're looking for.
Great. And we'll put all of that in the show notes for you folks. And then you could just click the link and be redirected to where you want to go. Eric, thanks so much for being here on the CEO Sales Strategies podcast today. Thanks for bringing your A game. Very, very grateful and appreciative that you are here.
Thanks for having me, Doug.
All right. Well, I hope you have a bunch of notes. I've got 2 pages here myself. So you want to minimize the negatives, right? And you want to stress test it on both sides when it comes to a compensation plan. I'm so glad we talked about compensation plans, because most people do not know how to build them or build them the right way. Remember, they're never going to be perfect, and it's always a test in process. You'll find better ways tomorrow, maybe even today. So always keep it fluid and keep it open to moving. We are going to sell on value creation, because that gets us value-based pricing. Remember, value is what the buyer deems as value, not what you deem as value. Could be one and the same, but the buyer cares about what the buyer wants, and the buyer is looking for a business return on investment or personal return on investment. And Eric did a really, I thought, top-notch job in explaining that, as well as segmentation of the customers and going after that economic right fit buyer. And you folks can up your sales, up your profits, really take the game up to a new level. And by the way, reduce your stress all in the process by doing what we talked about in this podcast. So if you are interested in growing your profits, growing your revenue, growing the process out, making things easier on your life, gaining back more money in your pocket, finding the hidden revenue, the hidden margins that are sitting in your business today, that should be in your bank account, but they're in someone else's bank account, but you're paying for it, reach out to me. We can help you solve that. Doug at ceosalesstrategies.com. That's Doug at ceosalesstrategies.com, and just put in the subject line what you're looking for. We answer all inquiries. If you love this podcast, this show is good for you, please give it a 5-star review. I know it takes a moment. Be forever grateful. If you're in the manufacturing world and you want to reach out to Eric, look in the show notes. All the information will be there. Reach out to him. He's an excellent person, and he's got lots of great opportunity for you. Until next time, this is Doug C. Brown with the CEO Sales Strategies Podcast, saying to your success.